Oh, the holidays brings out the best in us. We all know that person or that client that's absolutely always has to get a deal, always has to feel like they've won something from the other side. Well, if you are interested in that, stay tuned to the end of the December 2022 market update, and I will give you or that person the golden ticket for when they should cash in on getting into a home. So stay tuned for that. What's up, everybody? Jeremy Kane, eXp Realty. So excited to bring you the December market update, kind of remove you from the headlines, give you the real data and the information that's moving the market, and it's crazy. So I'm super excited to jump in. So without further ado, please like, comment, subscribe, but let's go. All right, we got to start with the current buyer mindset and all of this news and everybody talking about the Fed and Jerome Powell, and every time he talks, the market moves and everything improves. Well, I'm here to tell you that the recent news about how he maybe hinted at slowing their Fed rate increase, which will have a domino effect on the markets and eventually get to the real estate world, is absolutely something that you should keep an eye on. He did say that he might not raise it so much this next month, so that December Fed chair meeting is something to really keep an eye on. But as the market moves, mortgage applications have ticked up a little bit this week. And the ultimate truth is mortgage applications are really down, like as down as 2010 to 2015. And so that's what we're kind of basing this on. The buyers are sitting back, waiting maybe to make a move, but right when things happen, they seem to be a little spike. Not everybody, but that sideline is getting more and more crowded. And as we continue to move through this, we'll see kind of what the buyers do. But the honest truth is, you can't convince anyone now's a great time, now's a terrible time, right? There's fear in the headlines. There's real data out there. The buyers have been on the sidelines, for the previous 2 years prior to this little downturn we've had. The previous 2 years, they couldn't get in because they were outpriced and outbid and all of that. Over the last 6 months, it's been fear that's been holding them back. So it's really just the buyer's psyche that we kind of have to manage. And when they're ready to go, they're going to go. So keep an eye on that as Powell talks, as the unemployment rate goes up, as we kind of see the consumer spending level off, and we get a hand on those inflation indicators. Those are major times when we might see a flood of buyers in the market. So make sure that you're paying attention to that, keep your finger on the pulse, and always know that the Fed rate that they speak about is not directly correlated to the 30-year mortgage rate, which is what we talk about when we talk about mortgage interest rates. So just kind of keep an eye on that economic turbulence or flattening out or positivity all play a huge role in what those buyers are thinking in the market. And inflation obviously has taken effect, and the key thing here is to really control those long-term assets, and we want to prop those long-term assets up. And once we get inflation under control, that's where the money's going to go to, and housing happens to be one of those long-term assets. As we've talked about before, housing is not day trading, so we're always talking about the market and always talking about these little shifts, but the honest truth is it's a long-term game. And if you get into a home, obviously it's a long-term investment, but also gives you a pride of home ownership and all the things that are emotional about owning a home. So that's kind of where the rubber meets the road. Once we get inflation under control, then we can go back into, worrying about those long-term assets a little more, because they're not quite as in the moment and that kind of stuff. So if that happens, continue to see housing stabilize and be one of those tried and true long-term investments that we all know it is. And as we know, with all that in mind, housing was the first to kind of shift and see this recessionary period. And it's really important to understand that recession or pullback does not necessarily mean lowering of values or decimating of values or crashing like, some people say. Our year over year numbers are still pretty good. They're not quite as erratic and high and crazy as they were, record breaking, but we're still gaining. And I think what happened is, the buyers are always the first to know, sellers are the second to know. So as the market kind of shifted and those interest rates started ticking up, there was a little bit of pullback, and buyers were kind of like, oh, okay, I have a little power here, but they didn't take it. And then right when they waited, the interest rates jumped up, and that's when, there was a real big like, whoa, and that's when the fear came into the market. So that's really something that we're focused on, and making sure that we understand that as a whole is that the market is, ahead of the game. The buyers know, the sellers know, and that's kind of what we're worried about. But at the end of the day, it's if a buyer wants to buy, a seller wants to sell, housing is going to be okay. So as housing shifted and everyone was kind of worried, what happened is the sellers took their ball and went home. And they were able to do that because of what had happened. 86% of those homeowners, which we would call sellers in that instance, have a mortgage rate under 5%. So they're not willing to get out there and play unless they have to move, right? And they, sure, there was a little bit of a fallback in that peak pricing, and so when that happened, we definitely were a little bit concerned. But as they took their ball and went home, then things started to change. And then you have the sellers that have to sell, right? A life change, whatever that is. And those sellers are like, okay, well, we have such a great equity gain over the last 2 years. We've seen a, 38% increase over the last 2 years. And so as we kind of progress through this and they kind of tried to figure it out, they were willing to give a little bit of that unrealized gain back to the buyer. And that's why you saw prices just decrease a little bit from the peak. And so as we kind of factor that in, those people that have to move and have to make a move are just saying, okay, well, if I put my house on the market, I'm still getting 98.5% close to list price, so why not do it? So they were willing to deal a little bit in lieu of the life events that were happening. And so that's the market that you do see moving. And that's where you saw the buyers kind of get a little bit of an upper hand and get a little bit more negotiating power because those people had to move. They were saying, okay, well, here you go. I still had 38% gain. We've seen a 4 or 5% decrease since the peak pricing. So I'm really not losing anything because it's that monopoly money, right? So they're willing to give the buyers $200 for pass and go, in order to move on with their lives. And so that's really what happens. Buyers and sellers have to buy, have to sell, and real estate closings happen every single day. So that's where the market kind of was going, and that's what our market has been over the last couple months. And now we kind of see those little rate drops and those little things that, spike mortgage applications and get people out there, get more houses under contract on a weekend. And then the rates kind of do their thing and they kind of pull back. And so it's kind of an ebb and flow thing. To me, it's just all those buyers on the sidelines, the gates open a little bit, some people trickle through. And then as the markets react and they kind of come back, they close. And so, but there's a huge number of people waiting, just, I envision the running of the bulls, just waiting for those gates to open and get out there and crush the market. And we'll talk a little bit about that next. So if we actually talk about the numbers, and that's what I want to do here, we're 4.7% down from that peak pricing where, you could throw your house on the market for $25,000 more than the neighbor and get it or more. And so if you really think about that number, 4.7 from the peak, and people are talking about, 10, 20%, down, loss of value, all of this stuff. We're talking about that 4.7% of unrealized gain. We see a seasonal decrease in pricing over history anyways. So when we really think about that 4.7 from the craziest, hottest, bull market, real estate market there's ever been, where you could just put whatever out there, name your price, and there might be even bidding war and get you even more. That's not a very big number when you really step back and consider that. And here's the perspective bomb I got for you all. We are 38% higher in pricing on average in the Denver market than we were just 2 years ago, and 151% higher than we were 10 years ago. So you name an asset that in 10 years will double and then another half of 50% up, so 151% gain. You tell me what asset will do that. And this is even with these numbers pulling back a little bit and maybe correcting or shifting. So if you can tell me that I have a chance to earn 151% profit on an investment that I make today, 10 years from now, it's a no-brainer. And so we need to really think about taking it out of that day mindset. Oh, we lost 4.7% from March when things were amazing in the real estate market and we're just so bad now. 151% in 10 years. That's your perspective bomb that you really need to focus on, and proves to you that long-term real estate is a wonderful asset and one of the most tried and true there is. All right, for all you guys that were sticking till the end, if you are waiting on the sidelines, right now is the time to get in, because as we slip into the recession, we control that inflation economically. This is when the interest rates will most likely dip a little bit, and we've seen just crazy movement in an 1/8 of a point decrease in buyers getting out there and mortgage applications going up and under contracts going up. It's very finite, and if you're really paying that close attention, you'll see it. But here's the deal. If you go back to my, bull on the sidelines, there's just people that have been sidelined for 2, 3, 4 years, waiting for their opportunity, and now they're a little fearful. But if you're looking at the market and you're like, okay, I'm gonna wait till that interest rate drops. But right when that interest rate drops, where it's gonna drop to, who knows? But right when that happens, or the buyers just get used to that and the investors start using that and they start using it in the cost of living and the rents go up, regardless, you're going to pay it. So you guys got to understand that if you wait until the gates are fully open, it's going to be a rush. You're going to start paying over asking price and doing that stuff. I don't think it'll be quite as drastic as it was in years past, but regardless, you're going to get a little savings on the rate and you're going to pay a little, you're going to lose the savings that you can get right now on that close to list price and the negotiating power that you do have. So the thing is, why wait? Because what we've said over the whole time is that we're still seeing that lack of inventory. Sellers are the second to know, buyers are the first to know. So sellers are going to still be at home with their ball saying, I'm not going out and playing, I'm going to see what happens, right? And there's going to be all these buyers, they're like, no, now's the time, I need it, I have that great rate, whatever, the prices have hit the bottom, the bottom of 5% loss over 6 months, even though we've had close to 40% gain over 2 years and 151% over 10. But they're going to be like, it's time, but there's going to be no homes. And when there's no homes and there's buyers that are hungry, they just bid those prices right back up. And then those buyers that were like, oh, I'm not going to get in a bidding war, they're still on the sidelines. But I'm telling you, once those gates open, there's going to be people that are taking chances and ready to go. So if you're in that situation, right now is the time to get the best deal and understand we may have a little bit dip in price. It may continue to come down a little bit. You may be paying a little bit higher interest rate than maybe you could get in 6 months. But when you balance the two out and you're in a home and you're controlling your monthly mortgage rate, that's where it's at. So if you have any questions on that, let me know. I would love to sit down with any buyer and talk these numbers specific to them, specific to their zip code, neighborhood, whatever, because that's what we need to do, is we need to educate you on your specific situation and your specific, deal. So as we continue to do that, please comment below. There's a calendar link. I would love to have a buyer consultation. All of December, I'm trying to get as many as I possibly can so I can help people realize the American dream of home ownership. And that's really what it's all about. I hope this December market update helps you. I hope you understand that where we're at right now is a time where we have so much information at the fingertips and there's headlines, and most of us just read the headlines and we make our decisions from that. There's so much more that goes into this because it is a long-term financial decision. It's not a day trade. So I hope you guys have a great December. Happy holidays. And as always, like, comment, subscribe. I can't wait to see you on those buyer consultations to really talk about what's going on in your specific niche, in your specific market. Have a good one. Bye-bye.